All right, good evening, everybody. It is Sunday night. It is October 23rd, 2022. I hope everybody had a fantastic weekend thus far. Tonight, we are going to be doing our Markets a Look Ahead stream, where we'll be talking about all the major events that are going to be happening this week on Wall Street. So this is going to be an extremely, extremely important week. We have big earnings reports from the likes of Meta, Alphabet, Google, Amazon, Apple, and Microsoft. But in addition to pretty much all the big tech earnings, which I think is going to make for a very, very volatile market, we are going to hear from some home sales data. And we are also going to get a little bit of a glimpse, hearing from some Fed presidents to see maybe, are we going to get a pivot? Are they going to raise interest rates by 75 basis points, or are they going to only raise by 50? So we're going to talk about that tonight. We're going to break it down. Now, one of the other things I'd like to note is that on Friday, the BEA is going to report on personal income and consumption data for September. Now, personal income is going to be very critical to look at, because one of the things that Fed Chairman Jerome Powell is going to have a laser focus on is personal income increases, right? So one of the things that he's going to be looking at very, very, I would say with a fine-tooth comb, is to see if Americans are making more money and they're continuing to make more money, and that's going to put more upward pressure on inflation, which means they are probably going to be tighter for longer as it relates to monetary policy. But without further ado, let's get the live stream started. So let me put away my computer here. And let's see who we have in the chat. It's a very cold night. I'm actually shivering here. Spillian is here. Says, yo, good to see you. Tone Rick. This is good evening, Tom. In chat, the one and only Paul Greenwell. I see Austin City Limits. Alfred. Charlie Richardson, British Gray. It's a beautiful night out here in Manhattan. It's a little bit cold, and it just stopped raining. So I trust everybody's having a good night. I see Destructionist is here, NNB 045, Rocket. Yeah, so let's get this started. Lonnie is here. Says, good evening, Tom. Good to see you, Lonnie. Check out some of the amazing looking buildings. It looks like the weather's clearing up, so pretty good. Let me just close the window here. Let me zip up my backpack and we will be on our way. But it's going to be a very critical week on Wall Street. Pretty much all of I would say the top 10 in terms of market capitalization when we talk about the S&P 500, as well as the Dow. Pretty much every single company of importance that makes up the vast majority of the weighting in the indice is going to report. So let's just say that it's probably going to be a very volatile trading week. I see Dow Jones.eth is here. What's up, Dow Jones? Good to see you. Let's see if we start to buffer in the elevator. If we do, I'll see you guys on the ground level. Mr. Bagman is here. Sally, welcome everybody. And here we are. Beautiful New York City. A very cold night out, not gonna lie. Now, it did just stop raining. Hopefully we are gonna have a rain-free stream. But I think tonight we are gonna be walking uptown. I wanna see if we can make it all the way to the Met, the Metropolitan Museum. We haven't been there in quite a long time. We'll check out the Upper East Side. FredX, what's up, man? Long time no see. It's good to see you. I see Mike C. I trust everybody had a good weekend. I know I did. I actually spent much of this weekend sleeping. Slept in quite a bit because last week was extremely busy for me. Now, the crazy thing is we're going into the last week of October. So this is the last full business week of October. Obviously, you know, Halloween is the last day of October, and I think it's a Monday. So I guess you could say a week and a day left of October. But one of the things we were talking about, just a quick recap, last night's live stream, is we were talking about historical performance of the S&P 500 after midterm elections. So it's already going to be November, and November 1st through November 2nd is when we are going to be hearing from the Federal Reserve. Okay, now consensus across Wall Street is that we are probably going to have an additional 75 basis point rate hike. Oh, check this out. Before we go any further, look at this. So this is the corner of 33rd Street. Man, the Empire State Building's looking nice tonight. Gibson is here. Always appreciate you joining. Matthew P., welcome. Lila is here, says, hey, Tom and everybody. Welcome, welcome. James Simmons says, hello, Tom, from Tennessee. So we're going to make our way up Madison Avenue tonight, but as I was saying, we're probably going to get a 75 basis point rate hike, and this would be the fourth consecutive 75 basis point rate hike. Now, if you look back throughout history, June was the first time since 1994 that the Federal Reserve raised rates in increments of 75 basis points. Check out this restaurant. I haven't been here. It looks very good. I wonder if any of you in the chat have been here. This looks really nice. So we are now on a policy path that is the most aggressive in many decades. Now, one of the interesting things, which we're also going to talk about as it relates to the action across the board in the major equity indices, is that we did manage to get a follow-through day on the S&P 500 and the Dow Jones Industrial Average on Friday. It was the fifth day of a rally attempt, with the market closing higher than the previous day's close on higher than average volume. You know, let's cross, because then on the corner of Madison and 35th, you guys are going to see a good view of Empire and One Vanderbilt too. So we managed to get a follow-through day. Now, the question is, will this rally sustain? And I think it's very up in the air, but here's some key levels that I think we need to look for. So the Dow Jones Industrial Average has already rallied to its 50-day. I think in after-hours trading, futures just opened up a couple hours ago. I think across the board, all the major equity indices are in the green in futures trading, and the Dow is actually popped above the 50-day moving average. Now, I think it's very likely that the S&P may rally and the NASDAQ may rally to their respective 50 days. I'll give you one more shot of the Empire State Building here. Yeah, Mr. Bagman says, with the breakout engulfing weekly candle this time too, def short-term bullish, but watch those earnings. Yeah, I mean, it's going to be really interesting. It's going to be really interesting, and obviously this week is probably going to be make or break, right? Because we have all of the big, I would say, mega cap sort of tech companies reporting, from the likes of Amazon, you have Meta reporting, you have Apple. And so a little bit of a precursor here to Meta's earnings, and I think also for Alphabet, Google, is we heard from Snapchat, and they reported a really egregious quarter. And what we found out from Snapchat's earnings is that a lot of their clientele, or a lot of their customers, have actually telegraphed to Snapchat that they are pulling back on all of their marketing budgets across the board. So as economic uncertainty continues to persist, it seems as if a lot of businesses are sort of reeling in those advertising dollars. And if we think about a business like Snapchat or Meta, well, they're pretty almost one direction, for lack of a better terminology, is just to advertising dollars, right? So if advertisers across the board decide to pull back on spending, that's going to hurt earnings. It's going to hurt revenues too. Mike C says, Tom, layoffs, here we come. Yeah, I mean, Mike, I hope not, but that's usually how it starts. And I think, a lot of people that are joining the chat have been in the working world for many, many years, so you guys know the drill. They usually first announce a hiring freeze, then a quote-unquote reorganization. So they'll say, oh, we're going to do a quick reorg, and then that's when the layoffs come, right? Or they sort of force you out or manage you out of the business, is another terminology, especially if you're a salesperson. Has anybody ever heard of that? Your managers are managing you out of the business. So we're standing right outside of the CUNY Graduate School on a beautiful night, very cold night. Haven't really adjusted to the temperature swings just yet. I'm shivering a little bit. This is on the corner of East 34th Street and 5th Avenue. I'll give you guys one more shot of the Empire State Building. It looks so iconic here. Hey, Sabrina Fair, welcome. Anthony says, hey, Tom and everybody, good to see you, Anthony. Gregory is starting off at the Empire State Building 9-3. I would agree. I would definitely agree. Got yours here. It's so weird. Most of the companies reporting earnings after the close. That tells me lots of bad earnings to report. Yeah, I mean, well, usually most companies do report after the bell, but I do see your point there. Tyree says, hey, Tom, just got back from a quick weekend trip from NYC. Hey, how'd you like it, my friend? How'd you like it? Hopefully you had a fantastic weekend here. Yeah, Andre Almar says reorg equals a fancy way of saying we're going to fire people. Yeah, so that's usually how it goes. They'll have a hiring freeze, quote unquote, and then they'll say something along the lines of, we're going to have a little bit of a reorganization, and maybe they'll encourage you to apply for another position within the company. But we'll see. Hopefully some of these layoffs are very isolated, but in my view, I think a lot of these job losses that are inevitable are going to be very, very concentrated to a lot of the startup type businesses. We've already seeing it in Peloton, Zoom, a lot of the UCaaS providers, right? So the unified communications as a service companies, like Zoom, Ring Central is another one, 8x8, Vantage. So a lot of those businesses that had turbocharged growth due to COVID, what happens is, since they had about 2 to 3 years worth of growth compacted into 12 months, they had to hire people like crazy to keep up with the demand, right? Especially in customer experience and customer service roles. But now that we've sort of died down from COVID, there needs to be major headcount reductions across the board. And I think that's what we're gonna see. Hey, Laura M is here, says happy Sunday, everybody. Watching from North Carolina, good to see you, Laura. Anthony says, I just got management position at Southwest Airlines. Hey, awesome, my friend. Congratulations on your new role, love to hear it. Congratulations on your success, and hopefully you perform very well in your new role. Okay, so Tyree says it was nice. I live in Philadelphia, so it was a fun time. So I'm assuming you took the Amtrak, right? The only time I went to Philadelphia, I took the Amtrak train out of Moynihan train station. Wasn't a bad ride. Wasn't a bad ride at all. Maria says hello from Sao Paulo, Brazil. Good to see all of our Brazilian viewers. Xc says So to start off the week on Monday, which is going to be October 24th, can't believe I'm saying that, but it's already the end of October, which is nuts. We are going to hear from S&P Global as they release their manufacturing. Ooh, that guy was in a rush. Almost tackled me. As they release their manufacturing and services purchasing managers index for October. Now here's the issue. Just like what we saw with the Institute for Supply Management PMI numbers, I suspect we're going to see here in the S&P Global both manufacturing and services numbers is a steep and steady decline in those PMIs. Now, we've sort of discussed how to interpret this data before, because consensus is a reading above 50 signals expansion and a reading below 50 signals contraction. So many people interpret these numbers the wrong way, in my view. They'll look at the numbers and they'll say, okay, this is as long as the PMIs or the purchasing managers index is above 50, well, the economy is all well and good and we should maintain in a risk-on environment. But as you guys know from watching the stream, and we've been reviewing this, it's more the trajectory and the trend of those numbers. It's more the trajectory of the PMIs that matter. So what I like to do is usually I like to, make an Excel spreadsheet and actually plot the PMI numbers month by month, and you could actually see the business cycle in real time, so to speak. So for example, the S&P 500 and I believe the overall broader indices like the Dow and the NASDAQ, they actually put in a top on January 4th, 2022. And I believe the Institute for Supply Management PMI was almost 60. I think it was like 58. Now we've declined and the PMIs have collapsed and rolled over almost all the way down to 52. And I think, obviously, the first business day of the month in November, I think we could potentially see a reading in the PMIs under 50, which would signal contraction. So for S&P Global, their manufacturing and services purchasers managers index, consensus is for about a 51 reading. And for the manufacturing PMI, consensus is 49. So the services PMI, consensus is 51, manufacturing is 49, and this compares with a 52 reading and 49.3 reading last month. So you notice a trend here, right? You notice steep deceleration, steep declines in the PMIs, and thus the markets are following. Now, if we get a surprise to the upside and we start to see those PMIs turn up, well, maybe that would signal that we could be in for a more sustained rally because we are going to have a re-acceleration in the manufacturing sector and the service sector in the United States. Now, I think one other thing, we're about to be at the Stephen Schwarzman building here, which is the New York Public Library. Now, Stephen Schwarzman obviously made a lot of his money on Wall Street in LBO deals, or leverage buyout deals. Beautiful place here. Look at all this. Really interesting. Hey, Freezer is here. Says hello, good to see you. Tomorrow, today is Zero New York Mania. Interesting. Gregory, good to see you. R2D2. Hope you're well. Let's see if we can make it all the way up to the Met Museum tonight. Wow, take a look at the top of the Bank of America Tower. And you could also just see the spire at the top of the H&M Tower too. Hey, Teresa Diaz, thank you so much for the $2 donations. There's 23,000 subscribers, congrats, wow. Well, thank you guys so much, that's fantastic. I appreciate the support, Teresa Diaz, and I appreciate the support from everybody in the chat. It's been crazy to sort of watch this stream grow. It's been a very fun time, to say the least. Big Talk is here, says Tom. Happy Sunday night. Good to see a Big Talk. Likewise for you, my friend. Hope you're well. Now, I would say the last of the main financial firms are reporting tomorrow with Discover. Now, if we're talking about pure credit card plays, we heard from Amex or American Express. And one of the interesting things about American Express earnings report was the main sort of topic I sort of want to cover is the delinquencies, right? So when we're talking about credit card delinquencies, that is sort of a proxy to the health of the American consumer. So are Americans stacking up and running up debt on their credit cards? And if so, are they paying down the balance? And are they delinquent on their monthly payments? So according to Bank of America's earnings, we are still below pre-pandemic trends for both short-term and late-term delinquencies, which is good news. That means Americans are keeping up on their bills. They're paying their credit card bills on time. And even more so, credit card delinquencies are well below pre-pandemic trends. So you think 2019 and before. However, CEO of Bank of America, Brian Moynihan, did say that they're seeing a slight uptick. But still, even with that uptick, credit card delinquencies are well below pre-pandemic norms and trend. So on Monday, October 24th, we are going to hear from Discover Financial Services as they report earnings. And so I'd be very interested to hear from Discover sort of how they are operating with their delinquencies, because you also have to look at, I guess, sort of the demographics of your customer base. I'll give you guys one more shot of downtown Fifth Avenue here. So American Express, that reported earnings last week, that had the same sort of message as Bank of America, that customer delinquencies are very, very low. Well, we have to sort of understand American Express tends to have more of a, I would say, a higher net worth type of clientele maybe than a Discover. Now, also, many of the customers that American Express has, the majority of the, I would say, credit cards that are issued are charge cards. So it is expected that you pay the balance in full each and every month. And the good news coming out of that earnings report is we are not seeing any uptick or material uptick in delinquencies. So we'll see what Discover Financial reports. We'll see if there's any material uptick in delinquencies. But this is One Vanderbilt here with the blue top. Looks really good tonight. Hey, I see Chris Beeman. What's up, Chris? Good to see you. John says Tom should show us the phone booth. Gregory, good to see you. Welcome. Thomas L says, so what are your thoughts about 401k and people that have the money and real estate section of that? What do you mean, Thomas? I don't understand what you mean by that. Are you talking about like a REIT, a real estate investment trust? Well, the only news that we really heard out of the 401ks is I think they have raised the limit of what the contributions should be. So I think this year, if you have an employee-sponsored 401k plan or something like that, or even an individual IRA, I think you can, as of now, add more money to your retirement accounts. Man, it is cold, cold, cold tonight, and it's windy too. I'm freezing. Juan is here. Says, hey, Tom. Hello from Buenos Aires, Argentina. Good to see you, Juan. Thanks for being here. Flat Smack, welcome. John Hardaway says, yes, demographics are important. Let me know if you guys could hear the wind noise in the microphone. It is extremely windy here walking down Fifth Avenue. This is the Web3 New York City gallery. So I think you could talk about, like NFTs and things like that. But yeah, John, I think you make a good point, right? Because Discover Financial is sort of like the entry play, I would say, as it relates to credit cards, right? So chances are the people who are applying for a Discover card are probably not the same sort of demographic that are maybe be applying to like an American Express card, right? Or like a platinum card or a gold card, something like that. So I'd say Discover Financial is probably that entry level. So if we hear really good news from Discover saying, look, our clientele are paying their bills on time, there's no material uptick in short-term and long-term delinquencies. So a short-term delinquency would be like a 30 days, maybe you're 30 days behind on your bills. Long-term would be pushing 90 days plus, so about 3 months. So if we hear these two things tomorrow, right, I think these are the two magic elixirs, I would say. But check that out. That is the top of the Chrysler building. And then I'll give you one more shot of the top of One Vanderbilt. Wow, that looks really good tonight. So if Discover Financial comes out and says average credit card balances are not going up, and number two, consumers seem to be paying their bills on time, that is extremely good news, because there's a lot of talk, and we've been covering this on the stream too, a lot of talk about how stretched the American consumer is, right? We've been going through about a year now, a little bit over a year, of extremely elevated inflation. Okay, we're talking about 8.5% inflation as it relates to the headline number, about 6.5% inflation as it relates to that core CPI. So I think within the credit card data is going to be very telling to see if American consumers are still able to absorb the costs of those price increases that are then passed on by corporations. So I think it's going to be interesting to see. Brian Forrest is here. Good to see you. Always a pleasure, Brian. Yeah, Laney James says it's super clear out, very pretty. Well, it rained a lot. It rained a lot today. It was like a misty rain, and now it's just cold. So I think the rain brought in the cold front. Napa 1231 says, hey Tom, what do you think of Nouriel Roubini? I would say I disagree with him on many things, but I respect his work as an economist. And I think it's very refreshing to listen to. So here's sort of what I think, right? I think it's important to listen to people on both sides of the aisle. I think he is, I'm trying to figure out how I should explain this. He is very, very strongly opinionated, and he's not very willing to pivot. But I do respect him very, very much. Brad's brain says, Tom, there is no way credit card balances and defaults aren't going up. Yeah, I mean, it's kind of unbelievable, right? Now, oh, check out these dogs. Wow, those were like mini huskies. I don't think I've ever seen dogs like that before. Right? Those were like mini huskies. Those things were cool. So let me sort of rephrase that. And for those of you who actually want to do a little bit of a deeper dive, last week we actually did a deep dive into Bank of America's earnings. So if you type BAC in the chat, the Nightbot will actually drop the link to the investor deck, the Q3 Bank of America investor deck, where you can scroll down and actually see the credit card delinquencies in real time. Now, CEO of Bank of America, Brian Moynihan, did say that it did tick up a little bit, but if you look at the trajectory and the trend, it's still well below pre-pandemic levels, so 2019 levels. But I guess sort of what Brad's brain is saying is, in order to get to those levels, you have to start somewhere, right? So we're just starting to see a tick up. But I will say this. Did anybody notice, I would say, the broad-based consensus from all of the major investment banks and American Express? And I would just say the broader banks in general, the financials. Did anybody notice a common trend or a common theme? So this is the Diamond District, by the way. I'll show you the two main diamond sort of insignia light posts here. But they're putting a lot of money in their loan loss reserves. All right, I'm gonna cross the street here. They're putting a lot of money in their loan loss reserves. And this is very similar to what the investment banks and the financials did during COVID, right? So when COVID hit, they set aside a lot of money for potential bad loans, right? Or potential losses. Because once COVID hit, or the pandemic, C-19, what happened was a lot of these banks got freaked out. They're like, look, the government just shut down the economy. A lot of people are gonna lose their jobs. A lot of people are not gonna be able to pay their bills, not gonna be able to pay their mortgage, not gonna be able to pay their credit cards. So we are gonna put a lot of cash aside to cover those potential defaults. Now here's the good news. The good news is the banks pretty much never had to use any of that money that they set aside for loan losses. And I think one of the things that really turbocharged and juiced the 2021 earnings for these investment banks and banks in general is when they removed those loan loss reserves and put them back on their balance sheet. That actually turbocharged a lot of their earnings. But what we're seeing right now is a lot of skittishness, especially from CEO Jamie Dimon, who's the CEO of JP Morgan Chase. To use his words, not mine, he thinks that we are headed towards an economic hurricane. So a lot of the banks, American Express did it too, set aside some money for potential delinquencies and defaults. So we'll see what Discover Financial does. Iris Lou, good to see you. Romeo's here, welcome. Donna, California, always good to see you. The LT Prods, just think maybe people have preemptively reduced their balances because they know that bad economic times are coming. So the LT Prod, that's a very interesting observation, and I think you're spot on. Because did anybody notice the trend, the broader term, I would say the broader based trend, once all of these stimulus checks went out, like the Trump bucks and then after the Biden bucks? A lot of people use those stimulus checks to pay down their debt. Believe it or not. So the American consumer is pretty well capitalized, but I think here's what I'll say. I'll just cut right to the chase. If the Federal Reserve continues to raise rates and they accomplish their goal of demand destruction, Fed Chairman Jerome Powell said it himself. He wants to see the unemployment rate tick up. So if the unemployment rate goes to 4 or 5%, like the Fed wants, and people start to actually lose their jobs. Oh, wow, I think they're actually just putting up the Christmas windows here. This is crazy. Maybe a little bit premature, but definitely cool nonetheless. I think once you see the unemployment rate ticking up, that's when you're going to see a lot of those potential defaults or delinquencies. But as of now, the unemployment rate actually went down at the last non-farm payroll report. It was at 3.7%. Then the unemployment rate went back down to 3.5. So we'll see. All right, everybody, this is East 50th Street, 5th Avenue. This is the very famous Saks Fifth Avenue. And if you notice, they're actually putting up the Christmas sort of windows, the memorabilia, I guess you could call it, the decorations. You could already see it. This is going to be a big light show. It's like a massive, massive light show. And we'll be here live streaming it. Hey, Dan Zhang is here. Says nothing drives me crazy when Starbucks starts to play Christmas music in early November. Yeah, I think it's coming. You know, I was in Stop and Shop earlier, and they have the Thanksgiving stuff and the Christmas stuff falling all over the Halloween stuff. So it seems like every single year the Christmas stuff and the Thanksgiving stuff are placed out a little bit earlier. So it's interesting. Yeah, San Miguel says nothing new. Volcker, Greenspan, Bernanke, Janet Yellen, they all have been through this. Yeah, I think we are gonna potentially go into more of a Paul Volcker style Fed. Now, if you remember correctly, I'll take a look at these windows. These are interesting. You know, Paul Volcker, in March of 1980, the United States was battling about 10% inflation. And Paul Volcker had to raise the Fed funds rate to 20% in order to kill inflation and bring it back down to its 3% target. But in order for that to be successful, the unemployment rate went to nearly 10%. And at this rate, it seems like the Fed is very determined to create a lot of demand destruction. And this is St. Patrick's Cathedral, by the way. Beautiful looking church. Jonathan Francis here says, good evening, Tom and company. Always a pleasure to see you, Jonathan. San Miguel says, you're right, Tom. Alan Greenspan described those facts in his book. San Miguel, did you read Paul Volcker's book? I believe it's called Keeping at It. Now on Twitter, I don't know if you guys are following me on Twitter, if you follow @WalksWallStreet. Mohamed Alarian, which is a very, very famous economist, very respected on Wall Street. Mohamed Alarian actually tweeted a book recommendation. Now, I'm blanking on the name. I'm horrible with names, but I bought it today. But it's a history of monetary and fiscal policy from 1961 to 2021. Now, you might be asking yourself, well, why does the book only cover fiscal and monetary policy from 1961 to 2021? Well, there was a very famous economist, I'm sure all of you know him, by the name of Milton Friedman, that actually wrote a book that covers the years leading up to 1960. Ooh, a lot of honking going on. So they picked up here at 1961. Anyway, these are the doors of St. Patrick's Cathedral, the main front doors. They look absolutely beautiful. I'm gonna give you guys a shot of the architecture just so you can see an up close and personal shot. Hey, Y-Town says, hey Tom, enjoying your channel, love the financial conversations and the great idea to tie in the nightly walks around the city. Hey, Y-Town, thank you so much. Wow. What do you guys think about this view here? I think this is a very unique view. I'm gonna give it maybe a 9-7 out of 10. Now, the interesting thing is they actually just finished restoring the entire St. Patrick's Cathedral. So if you go back into my channel and look at the live streams from about 6 months ago, this entire area was encased in scaffolding around the entire St. Patrick's. Sabrina Fair, good to see you. Sunny 3156 is how old is that church? I'm not too sure, actually. I'm not too sure how old St. Patrick's is, but it's beautiful nonetheless. Hey, Rock is here, says, I love New York. New York is the absolute best. Appreciate it. Joseph Hardaway says, but I think a lot of businesses are gonna prep for a recession. Small and big ones are already ahead, but preparing is important. Yeah, I think this is the most telegraphed recession we've ever gotten. Would anybody agree or disagree with that? I think this is probably the most telegraphed recession we've ever had. I mean, the Fed it's just been like everybody has been so laser focused on the Fed We know what they're going to do. They've been saying it at all of their meetings. They've been very clear. They've been very, very clear, I mean, at least in my opinion. Now, here's where I think the Fed made a very, very big mistake. And that is keeping interest rates artificially suppressed for too long. Right? So the Fed is finally doing the right thing by normalizing interest rates. And my big sort of grievance with the Fed is that they've kept rates at levels too low for too long. But anyway, speaking about recession talk, I believe on Thursday, so this is October 27th, we are going to hear from the Bureau of Economic Analysis as they release its advanced estimate of gross domestic product. Now, economists on Wall Street forecast annual GDP of about 1.7%. Now, what do you guys think? You guys think that number is a little bit too high, a little bit too low? Or do you think we're going to come in at much stronger numbers? I don't know. I'll let you guys sort of ponder that in the chat, but just know that on Thursday, we are going to get the GDP estimate. Now, a recession is defined as 2 consecutive quarters of contraction, which is what we had. The first 2 quarters of the year, we contracted by 1.6%, and we contracted by 0.6%. So technical definition of a recession, I know there's some nuances here. I know many of you would say, well, Tom, how could we possibly have a recession when the labor market is white hot, when the unemployment rate is at 3.5%? And I get all that nuanced stuff, but call me old school. I think that just in a general sense, the technical definition is those 2 consecutive quarters of contraction. And I would even add to that and say, I don't really think it matters too much, right? I think the people who are putting a lot of credence on this recession debate are making it rather political. So the people who are saying, oh, I don't think we are in a recession, tend to be, on the Democrat side of the house or the aisle. And the people that are calling and pounding the table about, oh, we do have a recession, this is the worst thing ever, they tend to be, on the Republican side of the house. They're just playing political theater. But I actually don't even think it matters too much. I think you guys know my opinion. I think presidents actually get too much credit when the stock market and the economy are doing well. And I think they get too much blame when the economy and the stock market is not doing well. If you look, there's actually a pretty high correlation here. Since about 2011, there's a over 90% correlation between the expansion of the Fed balance sheet, so talk about central bank liquidity, and the trajectory of asset prices, or the trajectory of the S&P 500. So if you really want to talk about inflation, you could talk about asset price inflation that has been created by the Fed as they've been on a bond buying binge, buying U.S. Treasuries, buying mortgage-backed securities. So now that we are in this QT cycle, unwinding all of that quantitative easing, well, we have an equity valuation decline. I don't know if you guys could see this or hear it in the mic, but it is crazy windy here in Manhattan. And it's cold. I'm shivering out here. Hey, Kate Bunny says agree. Good to see you. Joshua Tucker says good night and greetings from Belize. Hey, welcome. Thanks for being here. Oh my gosh, it is so windy here. It's so windy, I lost my hat. I think we're getting like 20 mile an hour gusts. Oh my gosh. Yeah, Dan Zhang says, Tom, the Hang Seng index just tanked after President Xi announced his 3rd term. Yeah, I mean, we've been sort of talking about Chinese stocks, right? You talk about like Alibaba, Pinduoduo, and many other Chinese tech companies. Now, what would be the contrarian sort of trade here is to say, oh, go ahead and buy Chinese stocks. But I honestly just don't even think it's investable at this point. Now, maybe I'm wrong. I'm always open to different opinions. Maybe I'm wrong. But I think China is taking a massive step backwards. Let's just say that. And this is coming from somebody who used to be a massive, massive China bull. In college, I actually wrote many papers detailing bull thesis, or detailing a pretty big bull thesis for China in general. So this is where the main ice skating rink is going to be. They're actually building it right now, right here at Rockefeller Center. And as you can see, all the flags are blowing in the breeze here. Rich K says the Fed pumps $5 trillion into the economy and the government pumps in another $2 trillion. No wonder we're in this situation. Yeah, I mean, it's been all about easy money, right? And we've sort of been talking about that on the channel a lot, this concept of ZIRP, or zero interest rate policy. So my thing is this: if you're gonna do all those injections, right, like Rich talked about, and if the Fed is just going to unwind that, well, wouldn't it be a potential, I would say, interesting thesis to say that the market may retest COVID lows if we continue this massive balance sheet runoff, right? Multi-billion-dollar balance sheet runoff. And if the Fed continues to increase interest rates. Now, I think we're going to get a 75 basis point rate hike November 1st and November 2nd. And I think we're going to get an additional 75 basis point rate hike in December. And that's going to bring the Fed funds rate, or the target rate, to probably 4.25, which is sort of what has been telegraphed to us. Now, we did hear from San Francisco Fed President Mary Daly, and she actually said this is now the time to be looking at sort of dialing back those rate hikes and maybe doing a 50 basis point rate hike and then a 25 basis point rate hike to sort of see how the interest rate hikes that have already come into effect are impacting the economy. But we already know how it's impacting the economy. And I think it's making the biggest impact in the housing market, right? Because we know that obviously, on a technical sense, the Fed rate hikes do not have a direct correlation to mortgage rates, but that 30-year fixed rate mortgage tracks almost in lockstep with that 10-year US Treasury yield. And as the Fed raises rates, Treasury markets price in interest rate hikes, and that 10-year US Treasury yield, as of now, I think is at 4.22%, and that 30-year fixed rate mortgage is at 7%. Now, last week we heard from the National Association of Realtors as they reported their existing home sales data, and it was an absolute disaster. It was a horror show. And for the 6th consecutive month, we've been having declining existing home sales for obvious reasons, right? This time last year, if you wanted to buy a house, that's great. You know, take out a mortgage with 3%, 30-year fixed at 3%, and you're good to go. Now we're at 7%. Well, look at the Zamboni. They even have the, I think this is called a Zamboni, right? To sort of smooth out the ice. This is going to look great. I mean, it's already coming together pretty nicely here at Rockefeller Center. Sparks Carnival is here. Good to see you. Manny says Deloitte is headquarters at 30 Rock. Good to see you, Manny. Julia M. Yeah, let me see your question above. Hey, Blues Writer. Thank you so much for the $2.30 donation. This is congrats on 23,000 subs. Yeah, that's wild to me, everybody. Thanks for subscribing to the channel. This has been a blast. Huge blast. I love doing these live streams. Julia M says, Tom, do you think the Fed is starting to feel the public opinion in the United States and around the world to use more of a wait and see approach? And if so, do you think Fed Chair Jerome Powell might pull back? Well, on a technical sense, the Fed is supposed to operate independently, right? So that's sort of what the Fed mandate is supposed to do. They're not really supposed to be influenced by political opinion, and they're supposed to be sort of a separate entity, right? And I think a lot of people can sometimes get that confused. They think just because the name is Federal Reserve, they think it's an actual government entity. It's not. It's a private entity. So do I think that Fed Chair Jerome Powell sees all of the comments that are flying out? Do I think he watches CNBC? Yeah, of course. Do I think he probably talks to some, economists that are giving him some advice? Yeah, I do. But at the end of the day, if I had one main takeaway from Fed Chair Jerome Powell's speech at Jackson Hole, it's that he doesn't want to repeat the same mistakes that happened in the 1970s. Let me just give you guys one more shot at 30 Rock. I'll give you a shot all the way up. This is actually, I believe, the best observatory in the city. Because from the top of the rock, you could actually see, obviously, the Empire State Building. But I think the biggest takeaway from me was when Fed Chair Jerome Powell said we do not want to repeat the mistakes of the 1970s, where we pulled back a little bit too prematurely on rate hikes, which led to a stagflationary environment, which is a period of stagnating growth and high inflation. So he would rather go all or nothing and keep at it, so to speak. And did anybody notice the choice of words that Mr. Powell used? He actually used the term, we need to keep at it. Now, maybe that's a coincidence, but does anybody know what the title of the book, or I would say Paul Volcker's book, is? The title of Paul Volcker's book is Keeping at It. And the book sort of details and outlines his strategy when he was the former Fed chair of keeping at it and continuing to increase interest rates regardless of what political powers said, regardless of what the American people said, is to just keep at it, to kill inflation at all costs. It doesn't matter if jobs are lost. And I think Fed Chair Jerome Powell is going to keep down that path. Now, do I agree with that? I don't think it matters. I don't think it matters. I think I'm just positioning myself for the best potential outcome given the circumstances, I think. I don't know, but I mean, what do you guys think? Do you think there's going to be a pivot? Hey, Robert is here. Says, hey, Tom and fellow travelers. Good to see you, Robert. Kevin Ramsey says subprime is probably coming. Are you talking about in the mortgage market or in the car market? Simone, New York says the mortgage interest rate is 7%. Yeah, I think according to bankrate.com, the average rate on a 30-year fixed right now, I think, is 7%, and actually maybe a little bit over 7%. Now remember, that's the average, right? So if you think about that being the average, well, that means some people are getting quoted more than that, and some people are getting quoted a little bit less, depending on their credit risk, depending on their credit score, things like that. So what's next is, I think it's going to be a pivot. Dusty Cole says inflation needs to come down more and then pivot. Yeah, I mean, we could end up like, God forbid, Argentina that has, I think, 80% inflation now. So here's my opinion on why the United States doesn't have that raging inflation like other countries do. It's because we have the greenback. It is because we have the world's reserve currency. If we didn't have that, we'd be toast. In my view, anyway. Because a strong dollar has been able to put extreme pressure on emerging market currencies and emerging market countries that have a lot of dollar-denominated debt. Hey, 925 says, we are watching the collapse of the empires. Blues Writer says, I don't think he could raise much more with $31 trillion in debt. Totally different than the economy Volcker had. Blues Writer, I think that's the comment of the night so far. And I think that is, I was watching an interview with Mohamed Alarian, Dr. Mohamed Alarian, very well-known economist. So this is the Versace store and this is the Cartier store. Now, during the holidays, Christmas time, this building, it's beautiful as it is, but they have a massive, I guess, what is the mascot or the brand for Cartier? Is it a tiger? Something like that? I don't know, I'm not a big luxury guy, but yeah, I mean, how long can rates stay high with 10x the amount of debt? It's a good point. So speaking of a strong US dollar, here's a little bit of a concern, okay? So on October 26th, we are going to hear from Meta as they report earnings. October 25th, we are going to hear from Google. The 25th, we're also going to hear from Microsoft. And then the 27th, we are going to round out the week with Apple as well as Amazon. So let's talk about some, I would say, broader base predictions. And so here's what I would say. Let me know what you guys think. I think the theme or the common theme for this earnings season, as it relates to a lot of these tech companies that have a lot of exposure internationally, is you're probably going to hear on the earnings call something along the lines of this effect. Foreign exchange rates and currency fluctuations took a real big hit to our top and bottom line. Because if you're Microsoft and you're selling software, or if you're Apple and you're selling hardware overseas in a foreign currency, well, when they go to convert that foreign currency back to US dollars, well, they're going to get a lot less US dollars, right? I think as of recording this video, yeah, let me turn around because it's really, really windy. I think the Dixie is at 112. I believe the Dixie is at 112, which is multi-decade highs. So I think if we continue to have this persistent dollar strength, that's going to continue to impact earnings, especially for companies who have a lot of international exposure. Hey, Lauren says, hey, Tom, hello from Brazil. Thank you for joining. Corey Baker says, hello, fellow travelers. Good to see you, Corey. Simon, the interest rate on a 30-year fixed rate mortgage is 7%. A down payment on your home is just what you choose to put down, right? That's to your discretion. You could put 20%, you could buy that property in cash. A down payment is just a percentage of the home's total value you're putting down. The interest rate is, we're talking about the debt. So speaking of Microsoft, we're right across the street from the Microsoft store. Alex is here, good to see you. Iris Lou. Hey, Eyeglass Lady says, Tom, any thoughts on the end of the petrodollar in the news? I don't think that we will ever see an end to the petrodollar. And do you know why? Not to sort of, and I don't want to get into it too deep, but let me just say this. The US dollar is backed by one thing and one thing only. All right, before we get all sort of depressive, I got to show you guys St. Thomas Church because it is Sunday night and this is a beautiful looking church and I want to show you guys. So check out the architecture here. This is one of my favorite, well, I would say it's my favorite church in Manhattan, even more so than St. Patrick's Cathedral. I don't know, I just really like the architecture a little bit more in my opinion, but what do you guys think? Architecture alone, would you say St. Patrick's does it, or would you say St. Thomas? I'm thinking St. Thomas does it a little bit better for me. I don't know, it's just such a unique New York icon. I love it. Teresa Diaz is St. Thomas. Yeah, I agree. Now, The reason why I say I don't think the US dollar will ever lose its reserve currency status is because the US dollar is backed by the full strength and the might of the United States military. And it's just not gonna happen. It's just not gonna happen. But I don't really want to get too political on the stream, but that's just my view. I could be wrong. I'm totally open to being wrong, but that is my view right now. GM11, welcome. Thanks for joining. So we are now walking up 5th Avenue, northbound, past 54th Street. And I'm going to show you guys the Apple Store in honor of Apple's earnings report. So Apple will be reporting earnings this week on October 27th. Now, one thing I wanted to touch on as it relates to Apple, have you guys been noticing Tim Cook doing a massive pivot as it relates to manufacturing of iPads away from China? And this isn't only Apple, this is a lot of other tech companies, especially in the semiconductor sector. We're seeing a lot of supply chains being ripped away from China and reallocated to places like India and even the United States. And this is something that I call the domestication of supply chains. And I think that COVID has really exposed this issue, or I would say the need to have more autonomous control over your supply chain. And this is the Peninsula Hotel. Simone, I can't advise you on how much you should put down on your house. Apologize, but I can't. So this is the Steinway building right here. Which is a new addition to Billionaires Row. And then this is the St. Regis Hotel here. Sparks Carnival says Chipotle gives Q3 earnings on the 25th. I expect good results as many customers are still loyal, although lower income. Yeah, I think Chipotle is probably going to report a good quarter too. Because Chipotle is one of those sort of fast casual restaurants that is probably going to continue to have high demand. Now let me know if you guys hear wind noise in the chat, because it is so extremely windy that I think you guys are probably getting a lot of wind noise. I may have to switch to the microphone. YouTuber says Chipotle has gone way downhill. Well, I mean, the thing about Chipotle, it's relatively healthy, right? Relatively healthy. So as a relatively healthy option and an affordable option, right? You can go to Chipotle and get a nice meal for 12 bucks. I think that's pretty recession proof, right? So if you think about all the people who go out to eat for lunch, and maybe they, you know, during a good economic boom, they spend $25 to $30 for lunch. That sort of cohort is probably going to size down to maybe a Chipotle, spend 12 bucks. And the people that went to Chipotle anyway, well, you could afford 12 bucks. So I think it's a pretty economically sound company. So here's a nice shot of 432 Park Avenue, right on the beautiful Billionaires Row. And then this is the Trump Tower. where I think he still has a residence at the top, very top. Alex Berry says, are you from New York? I am. Simone, you're gonna have to send me an email about that. I can't advise you on how much you should put down on your house, man. I'm sorry. Rayo Dukes, I'd say comparatively healthier. Yeah, I think that's a better terminology, comparatively healthier. You know, if you think about like going to a Taco Bell or McDonald's. Now, Bill Ackman, billionaire investor Bill Ackman, has a pretty sizable position in Chipotle still. Wow, look at this. This looks like a completely new sort of atrium connecting these two buildings. I don't think I've ever seen this before. Ed Dunkel, good to see you. Welcome. Trust you're well. Now, you know a company that I was looking at, and usually I always say I never sort of bottom fish. Now, if a company is getting blasted and they're down like 70%, I usually never, ever, ever have it on my watch list. But I just put a company on my watch list that has been hammered. Okay, now I'm not saying this to go out and buy it. I'm not saying buy this today or tomorrow. I can't give you guys that advice. I'm just saying I think you should watch it. And this company is called 3M. Now 3M, or MMM is the ticker symbol, they've been getting absolutely blasted off the back of intense litigation for earplugs. So allegedly, right, I'm not sure, I think the litigation is going to go on for a long, long time. Active duty military, as well as retired military personnel, are claiming that a lot of the earplugs that were provided by the 3M company were insufficient, resulting in loss of hearing or hearing damage. And I think this may be like a $350 million hit to 3M. Now, I believe one of the companies, I think it may have been a subsidiary of 3M, and they're actually trying to file for bankruptcy. But this stock has absolutely been blasted. But it has a 5% dividend yield. And it's very possible, and again, this is just, we're speculating, we're having a conversation. It has a 5% dividend yield. It's a good, aside from all the litigation, it's a decent business. So I think I'm gonna put it back on my watch list and do a little bit more work on the stock. Now, I'm probably gonna go through all the financials. They are reporting earnings this week, so I will be on that earnings call. We'll probably be getting an update from the litigation piece. But look, in this environment, a stock with a 5% dividend yield, I'll have to do a little bit of a deeper dive into the financials, but I think the main reason why 3M has really been getting hit is due to that massive lawsuit. So I'm gonna be on the earnings call. We'll do a deep dive into the company, and maybe I'll even build like a DCF model on the company, and I'll share it with everybody. Real quick, this jewelry store right here, this was the major heist. I think the burglars or the robbers stole $500,000 worth of jewelry right here on Park Avenue. I actually work right here in this store. 430 Park is a WeWork office. So on the 18th floor is where you have the WeWork. And I think there's also some other hedge funds and investment companies in the building. But right here, burglars bashed down the front door, stole $500,000 worth of jewelry, and ran off. Right here, very high rent district, very, very safe neighborhood, right on Billionaires Row. Kind of crazy. Kind of crazy. But look at this building. This building looks amazing here. Hey, Alex Berry says 3M just closed the warehouse near me. Yeah, like the Scotch tape, the Post-its. Yeah, you're right. Mike MTL says, how's the balance sheet at 3M? I'm not sure, but I put it on my watch list, which means I'm going to do some work on the stock. Which means once they report earnings, I'm probably going to start to build my financial models on 3M and just see what the deal is. But at a 5% dividend yield, it looks pretty enticing. And I think a lot of this bad news is baked into the cake. But look, we'll see. I'm putting it on my watch list. Is that a CNN chain? Are you guys seeing this? Wow, look at how unique that is. I think this is a CNN chain, is it? Or maybe it's not. But this is an art gallery right at 432 Park Avenue. But if you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you guys join us as we explore New York City and Miami and talk about the financial markets. I'll give you one last shot of 432 all the way at the top. You can just see how massive this building is as we stand directly under it. Doesn't this sort of look like Gotham City, like in a Batman movie? So here's a little, and I think Ed Dunkel would probably know this better than anybody else, but 432 Park Avenue, you'll notice outside of a lot of the luxury apartment buildings and even some big commercial buildings, they'll have this public space here where anybody can come, sit down, hang out, chill, and eat. It's really, they do this so they can get a big tax break. But it's a really nice park nonetheless. They'll say, look, we'll dedicate some space for a public park, and then they'll get a pretty hefty tax break. But I think the park is pretty cool. Let's see what time it's open 24 hours too. So open to the public 24 hours right outside of 432 Park. Yeah, Gary Carpenter says it sure does. Get a pretty nice tax break, but this is just an amazing building. You know, I'm so impressed with a lot of the, I would say, newer architectural designs on Billionaires Row. Now, granted, there has been a lot of litigation back and forth against the developers and the residences of 432 Park because supposedly the building is so tall that it sways in the wind. Some of the units allegedly can actually feel the building moving. You could hear it creak when it's a really windy day. And sometimes the elevators get stuck because if the building sways and moves too much, the elevators can't operate. Kind of weird. The LT Pros 3M dominates a lot of categories. Seems like there will be a settlement and be fine. Yeah, and look, 3M, you know the market is really, really bad. When someone like me is looking at a stock like 3M and sort of looking at these value plays. Now, again, I haven't done a lot of diligence on this. I'm just merely moving it to a watch list so I can then go and do work on the company. I'm gonna build my financial models on this and I'll see if it's a suffice investment, but I'm an innovative growth stock investor. And my type of stocks are not in gear, okay? When you have the Fed raising rates, my type of stocks don't work, so I need to sit this market out. Any type of innovative growth is getting hammered right now. All right, now we are on 57th Street, Madison Avenue, outside of the IBM building. Yeah, sunny 3156 is scary. It's kind of weird, isn't it? Dutchman says, Tom, what's important to watch in general this week? Well, if I had to pick two, he would be my main two. So last week, we heard from the National Association of Realtors as they released their existing home sales. But on Friday, hold on, let me cross here. I always like to watch it when I cross, even if we have the light. If you guys have been watching the stream this last week, we've been seeing some crazy drivers, let's just say. So anyway, here's what I would watch. So we heard from the National Association of Realtors for existing home sales, but on Wednesday, October 26th, the Census Bureau will report new residential sales statistics for September. Okay, so this is new home sales. So the consensus call is for sales of new single-family homes, again, not existing, these are brand new homes, to come in at a seasonally adjusted rate of about 560,000. That would be about 120,000 fewer homes than the August number that came in right around 685. And I think we may miss on that. Because does anybody remember when we were doing our live stream about Toll Brothers and some of these other single-family home builders? Now, one of the things we heard from a lot of the home builder companies, right, the home builder stocks, is that they're getting very aggressive with offering incentives to customers, not for new home sales, but just to the customers that are already in contract, just to get them not to back out of the deal. Because interest rates has moved with such force. To put it in perspective, this time last year, if you were looking to buy a house, you were probably getting a 30-year fixed rate mortgage right at around maybe 3.5%. Now, if you're going to apply for a mortgage, a 30-year fix is going to run you a lot more than that, about 7%. So you're seeing a lot of existing deals fall through, and these home builders are having to cut prices aggressively and maybe, throw in a new kitchen, throw in new appliances just to get these clients from backing out of the deal. So I think new home sales is actually going to come in weaker than expected. Again, this is just my estimate. And that is going to be a big proxy, in my view, for future monetary policy decisions. Because, and I'll remind everybody again, does anybody remember Fed Chairman Jerome Powell's speech at Jackson Hole? Something he said was kind of scary, actually. He said, if you are looking to buy a home for the first time, or a first-time home buyer, he's like, you are going to want a reset. He used that term. That's not me, that's him. He said, you're going to want a reset. So what does that mean? If you have the Federal Reserve Chairman saying that you're going to want a reset in the housing market, that means he's going to want housing prices to decline substantially. And usually, when interest rates go up, housing prices come down. And it takes a while for those interest rate hikes to move through the housing market and really impact price. And this is why I think in Q1 and Q2 of next year, that's when we're going to see those declines in the price of real estate. Now, here's a little bit of anecdotal data for you guys. But first, let me just show you the Apple Store, because Apple's reporting earnings this week as well. Here's a piece of anecdotal data. So I told you guys my sort of bootleg algorithm that I created, and anybody could do this to sort of track the prices and the trajectory of rents and home prices. So I'll tell you guys one more time my sort of bootleg sort of algorithm. So what you're going to do is you're going to go to Gmail and you're going to create a brand new Gmail account. Again, you don't want to do this on your personal one. And this is only going to be for this task. So you're going to create an email address. You're going to go on Zillow, and whatever, oh my gosh, it's so windy and cold, man. Hold on, let me get behind this building. I'm not sure if you guys can see it, but it is windy. It's probably like 25-mile-an-hour winds tonight. Anyway, this is the Plaza Hotel. Beautiful building. Very expensive hotel, actually. So what you're going to do is you're going to take your email address, go on Zillow, and in your specific market, let's say if you're looking at, Nassau and Suffolk County, you're looking at homes between $500,000 and $600,000. Regardless of if you like that home or not, just as long as it's in your price range, what you're going to do is you are going to favorite every single one of those homes. So hit the like button on every single one of those homes. And the reason why you want to do that is because now, whenever there's a material change in price, either higher or lower, if the house goes under contract, if it's sold, you are going to get an email. So you can actually gauge pretty good sentiment of the market, because you are going to get hammered with a flood of emails of price decline, price decline, price decline. And over the past 2 months, my inbox has been getting lit up with price declines across the board as it relates to rents. Not so much the prices of these homes, but as it relates to rents, especially in New York City. So the rents in New York are actually coming down a bit. I've seen $200 price decreases. I've seen $100 price decreases. And in some of the more turbocharged markets like Miami-Dade, Fort Lauderdale, Broward County, you're actually seeing substantial price declines and price cuts on a lot of these single family homes. So that's just sort of a little hack that I use to keep track on the general feel of the market, because it sort of creates like a real-time, almost like stock ticker for you. One day I'll wake up and I'll see price decline across the board. I'll have like 50 emails in my inbox. And one of the things I've noticed lately is I've been getting a lot less emails of pending homes. So pending is like when the deal is going under contract. It could fall through. It's not yet closed yet. But those have pretty much gone non-existent. All right, real quick, everybody, this is the beautiful Billionaires Row. You have 3 buildings right here. Number 1, this one is Central Park Tower. The building with the big luminescent light coming out of it is 157. That is actually a building that has the Park Hyatt Hotel. And this very big, sort of slender one is the Steinway building. And those are my 3 favorite. I would say my favorite Billionaire Row building is 157, just because it is the classic one that started the entire trend. Now, you have very famous residences of that building from Michael Dell, and I believe Bill Ackman also still owns his unit there. Hey, Edward says, hey Tom, it also depends on seasonality. Less people are looking to rent than in September. Yeah, so that's actually a very good point. Edward makes a very, very good point. And also that applies to buying and selling too. Usually spring and summer is the peak selling season. Now, I will say in Southern Florida, a lot of people tend to list their homes for sale on the market in the fall/winter months to sort of attract a lot of those snowbirds. So I've been seeing a ton of rentals come on the market, especially in the single family housing space, or SFH space. A lot of rentals popping up in Miami, because usually what happens is you'll have, families that want to rent out the place for maybe 3 to 4 months, which I think is a pretty good deal, by the way. All right, team, check out these beautiful chandeliers in the lobby of the Plaza Hotel. These are absolutely beautiful here. Hey, Dan from Dayton says, my property value in Tampa just keeps going up, up, and up. Yeah, I think so. So Dan, here's sort of what I think. And I know we've been talking about housing a lot, but we're just getting a lot of housing data, so I think it's appropriate to talk about it. Here's my view. The markets that were extremely turbocharged due to COVID, like Austin, Texas, Houston, Miami, Florida, Fort Lauderdale, Tampa, I think those particular markets are going to see the steepest declines. Now, I'm not talking about a crash, but if you look back throughout history, okay, and I hate using this example, but I'm going to use it anyway. I'll give you guys one more view of 432 Park, and then we'll head down Central Park South. But if you look at the Great Financial Crisis, and you look at the specific markets that went down the most, they were the markets that also went up the most during the bull run. And you can think about housing markets such as Tampa, big housing markets in Nevada, Miami, so like Las Vegas. And I think you're going to see that same trend play out. Now, I don't think you're going to have 70% declines, 50% housing declines, mainly because it's a much different environment. Now, again, I know those are the famous last words on Wall Street. It's never different this time. It never is. But the only thing I think we could say for certain that was different this time around was the more, I would say, even ethical underwriting standards. Right, so leading up to 2008 financial crisis. So these are the residences, by the way. So even though the Plaza Hotel is a hotel, you could actually purchase a unit here, and they are absolutely gorgeous. Imagine walking up and having a residence at the Plaza Hotel, having your doorman meet you at your car, holding an umbrella. This is a classic New York scene here. But again, underwriting standards are a lot better. Not as many adjustable rate mortgages this time around, or ARMs as they call it. Very aggressive underwriting standards, I might add. So if you don't have a good credit score, if you don't have a stable income, chances are you weren't getting a mortgage this time around, right? Which is good. And also data shows that this time around, people were putting higher down payment amounts, okay? Higher down payment amounts. I do think that real estate prices will go down because rates are at 7%, they have to go down. But the first thing that happens is sales transaction volume declines. And that's exactly what we're seeing when the National Association of Realtors reported existing home sales for the 6th consecutive month of declines. And I think next year is going to be a big negative for the housing market, but that's going to present good opportunities. Hey, we got the Mighty Bull here. Central Park South always has these very unique looking sort of shops here. I think my favorite is this Mighty Bull right here, this one. Hey, X-Class Resumes says the rental market in Phoenix is still commanding 20% rental increases. So here's the interesting thing. So let's talk about rents for a minute. Now, we've been having an interesting dichotomy here because all of the people, so think about this for a minute as we are showing the Park Lane Hotel with this massive American flag, very bullish on this American flag right here. So all of the buyers, right, or the prospects, the prospective buyers that were in the housing market looking to buy a single family home, pretty much all of them are priced out of the market because we've had a mere 100% increase in interest rates. So what does that mean? Well, if you're priced out of the housing market to be a buyer, you got to live somewhere, right? You can't live under the Manhattan Bridge, so you got to rent. So this has created a very, very interesting scenario here, a very unique one, where almost overnight, you had the demand for rentals pretty much double. Because if you were in the market for a $450,000 single family home, and you were budgeting for 3.5% interest rates, let's actually walk through this little cul-de-sac here. This is cool. If you were budgeting for 3.5% interest rates, well, now interest rates are 7%, which means your purchasing power is cut in half. So now you have to rent. So now all of those, there's like twice as much demand for renters. That's why rent has been going up. But I think you're also going to see that cool next year after the major rush. But you're right. I mean, the Phoenix market has been on fire. The Sun Belt in general has been on fire. But I think you're going to see a lot of that subside. Hey, Dan from Dayton says, I'm getting $3K for a move-in on a 6-month lease for one of my units, where others with similar properties are getting $4K. Wow, Dan, that's awesome, dude. Congratulations on your success with that, my friend. So Dan, maybe, I'm not sure if you're new or not. I don't think I've seen you in the chat, but I bought a place in Miami and I'm doing the same strategy as you, man. So here's what I was originally gonna do. I was originally gonna Airbnb out the individual rooms, but that was getting very time consuming. So what I'm doing now is I'm only doing Airbnb for long-term rentals, which means on Airbnb, my sort of definition of long-term rental is 30 days or more. So 30 days or more. And the demand is ridiculous. So for the entire month of October, I actually have my entire house rented out at very, very aggressive rates. Very similar to what you're talking about. So yeah, I mean, it's a good move, man. Awesome. Congratulations on your success. That's fantastic. And thank God the hurricane didn't hit you guys in Tampa. I'm glad you guys are safe. All right, this is the Ritz-Carlton here. Something's happening. Hope they're all right. So this is Central Park South, everybody. One of my favorite places in the city. This is the Ritz-Carlton. Now look at this American flag here. Love it, big fan of it. Resumes says, yes, Phoenix has unchanged. Lots of price cuts on homes week after week since July, but apartment rents are still kicking up. Okay, so Dan from Dane says, I don't like that much overturn. I've considered Airbnb style, but I always do a 6-month lease. You know, Dan, I actually may steal your idea. I think I may try to do that. Maybe we'll talk offline. Maybe I'll send you an email, but for a month-long rental, right? So just to give you some perspective, whew, that was almost a major accident there. I didn't get it on camera, but this guy was barreling down the stretch and he was making an illegal U-turn. That was almost really bad. Holy crap. So for some perspective, my house is probably about a 5-minute drive away from the ocean. So it attracts a lot of vacationers, so people that are trying to go on vacation. So for a 3-bedroom, 2-bathroom home, you know, you could spend $3,500 and have a house right next to the beach. You can park your car in the driveway, in the garage, have a front backyard and sort of hang out instead of, you know, cramming your entire family into a hotel room. So I'm not sure if I could command those high rents on a 6-month lease, but I don't know. I'll consider it. I'm interested. 3T3 says, get the Northern Snowbirds or the British Foreigners. It's every year they come down for a couple weeks or 2 months. Ooh, it's starting to rain. Ooh, they almost hit that guy on the moped, man. Jeez, what's going on with Central Park South? Everybody's clanging and banging all over the place here. All right, I want to take you guys to Columbus Circle. This is 59th Street, Columbus Circle. It's an absolutely beautiful place. Now, this is actually my old building right here, 106 Central Park South. Now, I know I've told this story a million times, but I think we have some new people here. But when COVID happened in the city, it was crazy. okay? So in New York City, in the height of the pandemic, everybody left. I'm talking about everybody. So we had a mini flash crash here in the city in terms of the price of rents and real estate prices. We probably had about, some rents were a 50% flash crash. So I'm like, you know what? If I have the opportunity to live on Central Park South in a studio apartment with a Central Park view for under $2,000, I'm gonna do it. I'm like, what the heck? I'll do it. So I did it for a year, and then I moved out, bought my place in Miami, and the rent went right back up to $4,300 to $4,500 a month, and it rented in like 2 or 3 days. So let's just say my landlord was very, very happy that I decided to move out, and I didn't decide to stay. And it's so crazy, the volatility or the sheer volatility that happened during COVID in the price of real estate and the demand for real estate in Manhattan. It was like one day nobody wanted to be in the city, and then like a light switch, everybody wanted to be in the city. And we're pretty much back to normal. Pretty much back to normal now. All right, these two big buildings in the distance is Deutsche Bank Towers, formerly known as the Time Warner Centers. And right here is the 5-star hotel of the JW Marriott Essex House, which is a very nice hotel. It's a very quaint hotel. It is a 5-star hotel, and if you are interested in more sort of old school, classic style, not very modern, this is the hotel for you. I'll give you a peek into the lobby just so you guys can see. It's not like staying at, the Park Hyatt. It is very, very, I would say, more charming. Maybe that is the appropriate word. I don't know. What do you guys think? Look at the crown moldings all throughout. I think it's beautiful in here. Everything is all marble. On the weekends, they actually hire musicians to play here too. So this is Historic Hotels of America, National Trust of Historic Preservation, the JW Marriott Essex House in New York. Hey, Marcy is here. What's up, Marcy? Good to see you. Happy Sunday. Trust you're well. Yeah, it's very nice. And it's very conveniently located right across the street from Central Park. So this is the very start of Central Park right here. And you're right next to the very famous New York Athletic Club too. Joseph is like, looks like I'd stay there off of an impulse. It's good. It's awesome hotel. Excuse me. Hey, Mark D is here. Says, hey, Tom, hope all is well. Thank you, Mark. I trust you're well. Okay, I'm going to bless all of you with a fantastic view. Central Park Tower and 220 Central Park South. So this is Central Park Tower, and the top 3 floors of this building is selling for $250 million. And the building with the goldish sort of top is 220 Central Park South, which is very beautiful. Sam Miguel, good to see you. Jewel Mars says, evening, Tom. I'm home from the fabulous Boston's new Seaport neighborhood. Wow, it's $1 million plus to start for the luxury condos there. Very nice. Hopefully you had a good time. All right, let's run through a couple more things. and then we should be good. So let's talk about the futures. So futures, the last time I checked, across the board, S&P 500, which is the ES E-mini futures contract, was up about 26 points. The YM, or the Dow Jones Industrial Average futures, were up about 157 points. And the NASDAQ 100, or the NQ, was up about 103 points. So we did get a follow-through day on Friday on the S&P 500 and on the Dow Jones Industrial Average. And in my view, in order for this rally to be sustained, obviously we have all of the mega cap tech stocks reporting earnings from Apple, Microsoft, Amazon, and the like. But I think what's even more important than that, everybody, got to keep our eyes peeled on that 10-year US Treasury yield. Okay? So the correlation there, as bond prices sell off, you have yields going up and skyrocketing. But if you have a bid in the bond market, if people start buying bonds, or an entity out here that starts buying bonds, you could think about the Federal Reserve, well, we're going to have yields come down. So if you go on tradingview.com or any sort of charting service that you use, and you pull up a chart of the yield, so the 10-year US Treasury yield, you'll see a potential short-term top in the yield on the 10-year Treasury. Now, if we pull back to the 50-day moving average on the 10-year, and we have a little bit of dollar weakness, I think the Dixie, which is the dollar index that measures the relative strength of the dollar versus a basket of other currencies, if we have dollar weakness this week, and we have yields that are coming down, I think this rally is going to be sustained, and our target is probably the 200-day moving average across the board of the major indices. So please keep your eyes peeled on that. I think as of doing this video right now, the bond market may be getting a little bit of a bid, and I think that 10-year US Treasury yield is coming down a bit. But this is the Trump International Hotel and Tower. Now, one of the interesting things about this building is that it actually has a swimming pool. So a lot of five-star hotels in the city, like the JW Marriott, the Essex House, it doesn't have a swimming pool. It does have a gym. But this building, this hotel, does have a pool. And so does the Park Hyatt. So we'll take a quick lap around Columbus Circle, just to show you guys. Now, another really nice hotel is the Mandarin Oriental, which is located in the North Tower of the Deutsche Bank Towers right here. Hey, 05, what's up? Good to see you. Hey, Thomas Ellis says, what do you think about the people that bought houses in the last year? And the mortgages will be flipped. They have no way out. Well, I think if you bought a house in the last year and you were using it for speculative purposes, right, or speculating on the housing market, then you're probably going to lose money, right? So if you guys remember on the live stream, one of the things we were talking about a year ago, and we called it, we nailed this to the wall. I think, you know, we could pat ourselves on the back here on the Walks in Wall Street channel, because a lot of people that have been commenting over the past year, we've been saying the same thing. We've been saying, look, a lot of these people in 2020 and 2021 that were putting in offers well over asking price to the tune of $100,000 over asking. All of the people who were waiving necessary inspections on their homes, it was craziness. And these people are probably going to lose a lot of money. And I think we nailed that to a wall. But in bull markets and bear markets, there's always good deals in the real estate market. So if the numbers work, you should do the deal, right? So if you're looking to buy cash flowing real estate, if you run the numbers and the rents will cover your mortgage payment, then the deal is a good deal, right? But if you don't run the numbers and you overpay for real estate and you're trying to flip real estate, maybe just buy it and sell it really quickly, well, yeah, then I think you're going to get yourself in a puddle of hot water. But for those people who bought real estate in 2008, right? Let's say an investment property, and you did the right thing, you just bought it at a wrong time, and you held on to your real estate and you rented it out, or maybe even live in it. For me, if I'm going to buy a piece of real estate, it's either going to be a duplex, triplex, or a single family home that I'm also going to get rental income from. But history shows that over time, unless you do something really, really wrong and you're looking to speculate in the real estate market and like flip and put very, very low money down, then yeah, you're probably going to get yourself into some hot water here. But if you bought in the last year, if you have a healthy down payment, if you have savings, maybe the valuation of your home goes down for 7 to 10 years, right? But if you're going to hold on to that house, maybe you could rent out, a couple of the bedrooms, house hack, and have the tenants pay down the debt on the mortgage, then I think you'll be fine, right? I mean, you shouldn't think about your house as a speculative asset, right? I always sort of make this analogy as it relates to the stock market. I mean, you can't live in your stocks, right? I can't log on to my Charles Schwab brokerage account, look at my Apple shares and live in it. I can't take a shower in it, right? With real estate, you can raise kids in the house. You have a place to take a shower, a place to go to bed, right? And if worse comes to worse, you could always use house hacking methods of, renting out the individual rooms, and you could pretty much live for free like that. But statistics and studies show that over the long term, if you are a competent and you're not just speculating in the real estate market and you continuously over long periods of time acquire properties, rent them out, they have good cash flows, it's better to be an owner of properties that are cash flowing producing properties than just to rent and have no real estate portfolio, if that makes sense. So I know there's a lot of people freaking out. I think some people are going to get themselves into trouble, unfortunately, but I think the people that will have gotten themselves into trouble are these people who have participated in all of these bidding wars, $100,000 over asking, waiving inspections. Yeah, you're going to get yourself in trouble. So this is 15 Central Park West. This is one of the most expensive apartment buildings in the entire New York City. Now, I think former CEO of Goldman Sachs, Lloyd Blankfein, has a unit in this particular building, and I think Alex Rodriguez and Derek Jeter at one point also owned units or were renting units in this building as well. And this is West 61st Street and Broadway. If you continue to head uptown, you'll hit into Lincoln Center. I don't think we're gonna have enough time to go to Lincoln Center tonight in the live stream, but maybe we will later in the week. But here's a view of Midtown Manhattan standing from Columbus Circle. Hey, JR, good to see you. Mike C says you can't take a shower with your Apple stock. You can, however, take a bath in it. That's hilarious. That's a good pun. I'm screenshotting that. Dan from Dayton says, I have 3-unit building in Tampa, Florida, and a duplex, and a renovated duplex into single Victorian in Dayton, Ohio. Hey, that's cool. So Dan, any thoughts on Dayton, Ohio? Is it a good rental market? How are the comps over there? All right, let me give you guys one more shot of the Trump International Hotel and Tower. This is the restaurant. I think it has a couple Michelin stars here. Sabrina Ferris says, love the view. Nicholas says, hey Tom, what is your reaction to President Biden begging Saudis for oil? Well, I think it's a political play, obviously. At the end of the day, you know, we are releasing a lot of our strategic petroleum reserves ahead of the midterms, right? We're trying to get the price of oil down. I think that may be short-lived, but I will say this. If you look at the XLE, for example, so the XLE is the Spiders ETF that tracks, the energy sector. Now, we're emerging out of a pretty solid-looking base. However, the base is relatively late stage. I would say like a stage 3 or a stage 4 base. And the higher the base count, the more likely it is to fail. And right now, I would say we're probably at about a stage 3 or stage 4 base on the XLE. But I do have exposure. I actually bought it over the swing high at 85. Now, I don't usually like talking about the specific things I'm trading or buying because, you know, you'll say one thing and then I'll get emails like, oh, I'm so glad you told me to buy this and that. I'm not telling you guys to buy anything. We just do a live stream to discuss broadly the financial markets. But again, what the point I'm trying to make is I think this energy trade could potentially be a little bit long in the tooth. Potentially. Did anybody see the cover of Barron's this weekend? Anybody see the cover of Barron's? Now, there's something called the newspaper curse. Has anybody heard of that? Has anybody heard of the newspaper curse? So I'll give you an example. So during the height of COVID-19, I'll show you the outside of Deutsche Bank Tower real quick. But during the height of COVID-19, the New York Post published a huge article on the smack dab on the front of the New York Post. It was the Wall Street Bull with a mask on, and it says, market down 2,000 points, Wall Street wiped out. And I picked up that paper and I sent it to my friend Jim. I'm like, Jim, this has got to be the bottom. And I mean, this was when this was total pandemonium. So it's not to say that whenever a Main Street media outlet is publishing, you know, negative sentiment or positive sentiment on the market, you should just take the other side of the trade. That's not what I'm saying. But you should use it as one of your indicators to say, okay, let's put things into perspective here. You know, if I have the VIX at 80, I mean, I remember during the COVID crash, the VIX went to 80, higher than it did in the great financial crisis. And everybody thought the world was going to end. So anyway, long story short, in this week's Barron's, I'll actually show you guys. I have it. Let me show you. I have it. Hold on. Here it is. It says Big Oil's surprisingly bright future. And this is after we've had a monumental rally in crude oil from literally from negative 20 to 130. I think the top in crude oil was 130, I think back in March. March. I think the futures ticker symbol CL for crude is trading at what, $85 a barrel? Could anyone pull up the crude futures right now and see what we're trading at? So anyway, you sort of get the picture, right? Now, I'm not saying, okay, the energy trade is 100% over, but when you start having entire cover stories about, you know, this is, you know, the next best thing, it's going to have a bright future, you know, it's probably somebody's talking their book to try to, you know, have Main Street provide liquidity to exit out of your positions. Now, this may take months. It may take a year to do. But, you know, I am long energy, but cautiously long, I should say. I will say this. I have another cover story on Barron's. This was just before Christmas, and the main headline on Barron's was 5 big balloons, and each balloon was labeled Amazon, Apple, Netflix, what was the other one? Meta, and Microsoft. And it says mega cap techs, monsters rise, and it was balloons rising into the heavens, and that literally marked the top in all of these mega cap tech stocks. Now Netflix was down about 80%. Netflix is actually a market leader now, rallying pretty nicely off the bottom off of that big earnings beat. But you sort of get the picture. Now, you sort of got to be nuanced about this stuff. It's not to say, okay, once you see it in the mainstream headlines, you take the other side, but it's just another tool you could use to leverage. That's all I'm saying. So Tug Carter says 85.14, okay. So are we trading above the 50-day in crude? I think we are. I think we may be. Hey, Christy F, what's up? Good to see you, Christy. But if you guys are enjoying the live stream so far tonight, feel free to hit the like button on the video and hit the subscribe button if you are new. We do these lives about 5 days a week between New York City and Miami. Also, if you like our investment talk, we have a free newsletter where I write about the US equity market, emerging markets, fixed income, and the like. So if you want to be a part of it there, you could scan the QR code on your screen, punch in your email, and you'll be signed up to receive it for free. Now, oftentimes, a lot of the stuff that we talk about on the live streams, I'll include in the newsletter. And also a lot of the ideas that viewers put in the chat, I write about too. I think one of the best things I'd say about these live streams is that we hear many different opinions, right? We may not all have the same investment thesis, so we could all challenge our different perspectives, and I think that's made me a better investor, and hopefully it's helped you guys too. So feel free to join us there. This is 57th Street Broadway, so we've now completed the loop. We're gonna make our way down to the Moynihan train station. So we were all the way over at this building, 432 Park Avenue, and we have now come all the way full circle here. I do want to show you guys one thing though, before we make our final descent to 34th Street. I want to show you guys the front of the brand new Central Park Tower. Hey, Hana says, greetings from Saudi Arabia. Good to see you. Thank you for joining. You know, it was interesting. I was looking at the YouTube analytics, and we have about 5% of the audience from Saudi Arabia. So that's so cool. I mean, that's amazing how we could go live and you guys could see us. So happy to have you here. Okay, so let's get away from the scaffolding. And you guys are gonna be amazed by this. Check this out. You can get an amazing perspective of just how tall Central Park Tower is. Check this out. So this is the front of the building. This is the main entrance. But look at how tall it is. This is insane. Isn't that wild? So this is the brand new Central Park Tower. And if we turn the camera, you'll see the 157 building. But I mean, man, Central Park Tower is breathtaking. It almost hurts my neck looking all the way up there. It's insane. Yeah, one of the wildest towers in New York, I agree. Engineering is definitely amazing. Dusty Cole, good to see you, my friend. Hi, Rebecca is here. Good to see you. Hey, Paulette is here. Good to see you, Paulette. The Mighty Bull. Always a pleasure. Okay, we're gonna make a left on Broadway, head down. Christina Thompson, Line Sync says, hey Tom, it is 1,550 feet tall, the Central Park Tower. Connor says, is there a real estate section of the newsletter? Yeah, we do write about real estate sometimes. And also stay tuned, because we do have some exciting, we have a lot of exciting stuff planned for the podcast / live stream, as well as the newsletter. So a lot of cool stuff coming from both Miami and New York. So just a quick recap, since this is the Markets Look Ahead live stream. Tomorrow sort of rounds out the main financials, right? Reporting earnings on Wall Street, because last week, every single earnings season kicks off with the major investment banks, right? And consensus from the review of last week was investment banking revenue was going to be down across the board. We knew this already because IPO activity is down 99%. So a lot of investment banking fees are down heavy. Now, M&A activity, so on the mergers and acquisition side, was also down. But according to Goldman Sachs CEO, David Solomon, he says that pipeline is looking pretty robust. So that's good news. But a lot of the investment banking revenue is down across the board. So if you think about it, Goldman Sachs and Morgan Stanley, that has pretty broad-based exposure to the investment bank side of the house and really no exposure towards retail banking. Now, I shouldn't say no exposure, because Goldman Sachs does have their Marcus division, so Marcus by Goldman Sachs, but that is a big money loser so far. Okay, it's not like a Bank of America or JP Morgan Chase, where you could walk into a local branch. It's more of a just getting their foot in the door. So Bank of America, JP Morgan Chase, I think were the two standouts this earnings season. Now, earnings were down across the board. If you look at net income, almost every single major financial institution was down over 40% as it relates to net income. But this was to be expected, as deal flow fell off a cliff. Higher interest rates sort of killed that market. Oh yeah, I'll show you guys this. So this is the Ed Sullivan Theater. This is where they filmed the Colbert Report. So Late Night with Stephen Colbert is right here. All right, I'm gonna put you guys down for a moment. One second. I apologize. The phone was going to die. I needed to plug in the battery because we spent a little bit too much time uptown, but I think we had a good talk. I always get lost in our conversations, so I just want to make sure we can make it down to the Moynihan train station in time. I see our good pal Ebit Daz here. It says, hey, Tom, nice to see you. Hopefully you had a good weekend. All the best for the start to the week. You as well, Ebit Da. So, going to be a big week. It's going to be a busy week. We're hearing from Apple, Microsoft, Amazon, all the big tech. Now, if we want to touch base on the big tech, so I call them the big three. That is Google or Alphabet, Microsoft, and Amazon. I think those are the three main ones we need to watch, because I think those three companies possess the engines for the majority of, I would say, turbocharged growth when it comes to cloud computing. So if we think about Amazon with their AWS, Microsoft with their Azure cloud, and Google's with their Google cloud, that is going to be very, very critical to see the growth trajectories there. Now, Google's cloud unit is not profitable, but it continues to lose less money every single quarter. And contrary to what many analysts on Wall Street believe, I still think that, in general, cloud computing is in its infancy of adoption. If you think about artificial intelligence, a lot of new AI startups, they're going to need a platform to power their AI. And that's either going to be Amazon, AWS, that's either going to be Microsoft Azure, or Google's Google Cloud Unit. And how do we know this? Well, a couple of years ago, Google made a very strategic acquisition of a major AI company. Now, does anybody want to guess what that company was? Does anybody want to guess what the major artificial intelligence company that Google acquired? I'll give you a hint. It's Deep something. All right, while you guys are trying to figure that out, this is the French investment bank, BNP Paribas. And I'm not sure if you guys know this, but a helicopter actually crashed on the roof here, I think in 2014. Am I right on that? Is it 2014? Yeah, you're right, DeepMind. You're correct. They acquired DeepMind. Yo, Natalie's here. What's up? Natalie, happy Sunday. Yeah, Memo says the image is tilted. Unfortunately, I'm not gonna be able to fix it, but it is a little bit crooked today. But this is BNP Paribas. And there was one very, very dreary, miserable day in Manhattan, and it was so cloudy. And a helicopter, unfortunately, crashed right here. It was wild. Unfortunately, I think the pilot passed away, but it could have been way worse. I mean, you have a helicopter crashing in Midtown Manhattan. Thank God nobody else died. Yeah, Sam, you're right, DeepMind. So I think a lot of artificial intelligence is going to be a big growth driver for cloud computing. Blink SMK says, who should I keep stocks with? Want to invest over time and build up blue chip stocks? I can't give you any recommendations, to be very blunt. I can't recommend any types of securities to buy or sell. But, I mean, you could just sign up for a brokerage account at Fidelity or Charles Schwab. Speaking of Charles Schwab, perfect segue right here. We got Charles Schwab right here. Now, if you want to run money, if you're serious about, running money, then I would recommend Interactive Brokers if you're running like a long short. But if you just want a dollar cost average into an index fund, Charles Schwab and Fidelity is fine. They're good companies. Just don't use any of the discount brokers like Robinhood or any of that other nonsense. I think just as long as you stay away from, the Robinhoods and like the Weebles, I think you're fine. All right, so we're outside of the UBS. Marcelo Gill, if you're still in the chat, this is for you, my friend. And then right across the street, we have Neuberger Berman, which is a big asset manager. I'll show you guys. And then adjacent, we have Mizuho, which is the Japanese investment bank. Now, from the street level, you could actually see the trading floor of Mizuho. Let's see if we could see it. You can see all like the Bloomberg terminals. I'll see if I can show you guys. We're running a little bit over time, but we'll see. They sort of made a nice art gallery here. The lobby looks really nice for UBS. But you can see the trading floor here. Well, at least I can. I'm not sure if you guys can see. But you can see all the Bloomberg terminals here. And this is Mizuho. Right across the street from UBS. So we're right up against the 2-hour mark, everybody. We covered all of the topics that we needed to cover. We ran through earnings. We are going to get some new home sales data out. And I will take you guys back with me to Moynihan train station. And here is Radio City Music Hall. Very famous place. You know, I think this year I may go see the Rockettes at Radio City Music Hall. Yeah, I'll give you guys a good shot of Radio City while I put my battery away, and then we will book it to Moynihan. Brad's Brain, what's up, man? Marcy's always wanted to go to the Rockettes. I think that you gotta go. You definitely gotta go at least once. So this is probably the best halal food in the entire city right here. Adele's famous, by far the best. Now here's the rule about Adele's. I'll tell you guys. You see these flagpoles? If the line ever goes past the third flagpole, it's a 3-hour wait. So once you hit the third flagpole, you're gonna be waiting for 3 hours. So the people at the back of this line, they're definitely gonna be sitting on this line for well over 3 hours. Well, I would say probably right around 3 hours, because the line moves at a snail's pace. Capitol Post is here, good to see you. Wow, they did a great job here. Do you guys remember this used to all be scaffolding? This is Del Frisco Steakhouse. I actually used to take a lot of clients here. Yeah, Rob K is like, what is the ticker symbol for Adele's? You know, it's funny. There was actually a bodega in New Jersey that had some crazy valuation, like a $500 million valuation on the OTC market, so over the counter. It was a penny stock trading over the counter, and it was a bodega in New Jersey. Did anybody see that? Now, allegedly, I think the owners were arrested for securities fraud just recently, but for like market manipulation. But yeah, I mean, what multiple of sales did that company have to be trading at? I mean, a bodega, maybe you're doing $1 million a year in revenue. I don't know. Nicholas Durr says, what part of New Jersey? I'm not sure, I forget, but if you type in New Jersey bodega stock market, the article is gonna pop up. Now, I think this was during the COVID pandemic when there was a lot of the sort of those speculative meme stock traders. Rob K says, what do you think Adele's makes in a day? A lot. I think they make a lot. Wow, Sparks Carnival says owners of a small deli are charged a fraud valuation of $100 million. Wow. Yeah, I mean, in theory, right? Anybody could launch their stock, right? If you just create a company, you could launch it on the OTC markets. But I mean, if you really think about it, why would you ever do that? I mean, it's just so obvious you're gonna get caught. Well, speaking of my old office, here we are, 1166 Avenue of the Americas, the Marsh and McLennan building. Now, in our building, we had we still have, well, I don't work there anymore, but in our building, we had a very successful quantitative-based hedge fund, D.E. Shaw, which stands for David E. Shaw and Co. One of the most successful hedge funds that ever lived. Right up there with Renaissance Technologies. Hey, Ryan says, hey, I just discovered your channel last week. I love it. If you ever walk by Fox News, please show it. We just walked past it. If you rewind 30 seconds, the News Corporation building is right there. Yeah, we just walked past it. So it's called the News Corp building, and News Corp owns Fox News, the Wall Street Journal, Barron's, Investors Business Daily as well. So yeah, they're right there. Yep. Now, I'll tell you a quick crazy story about that building. Since I'll call this Walks on Wall Street after hours. Anytime we exceed 2 hours on the live stream, we'll just call it Walks on Wall Street after hours, where I'll tell you guys some outlandish stories. So they have beautiful Christmas decorations every year outside the building. And last year, I think some guy in the middle of the night set the entire thing on fire. And it was a huge Christmas tree with all the decorations, and some random guy, I don't know why, he set the entire thing up in flames. It was wild. They had the FDNY here, everybody. It was nuts. Beautiful view of the Empire here. Outside the Bank of America Tower, Brian Moynihan's building. They reported a decent quarter last week.
Yeah. Look, there's no huddle stand all the way.
– 42nd Street, Bryant Park, and get the BDF and M trains. This is the main Bank of America Tower. This is my favorite part. You see the Empire State Building, fantastic. Hey, Rebecca says, I just clicked on here for New York. Gonna learn lots. Good to see you, Rebecca. Thank you for joining. Appreciate it. Could we do a quick time check in the chat? Because I think I may just make my train by like 5 minutes. So if you look all the way down, that's the One World Trade Center or the Freedom Tower. You can see it all the way in the distance. Hey, hello from India. Wow, you're watching from India at 8:30. That's awesome. All right, we got 15 minutes. We'll make it, no big deal. So this is Whole Foods. Amazon actually acquired Whole Foods. Now, speaking about big M&A activity on Wall Street, I think Kroger is gonna make a bid for, how do you pronounce it? Is it Albertsons? Now, I've never been to this grocery store chain in my life, but I think Kroger is trying to buy them. And I don't think the deal is going to go through. I think they may be forced to divest. It's very possible. But I think in order for that deal to go through, they're probably going to have to sell off some of the stores to different subsidiaries, something like that. But Tortellini's like Kroger's, that's still around. Yeah, I mean, I think they have 15% market share. Oh, JR says that's how you say it. Yeah, so Kroger is making a bid for Albertsons. And I think combined, that would make up about 15% market share. Now, Amazon is making a big push into grocery as well. But I think the biggest push is going to be with grocery delivery. And obviously, you know, Amazon definitely has the bandwidth for that with Whole Foods and the like. Oh, it's Kroger's with the S. Copy that. Steve CR says Kroger's is big in the South. Yeah, I don't think I've ever been to one. Now, supposedly Albertsons, they have some locations in Chicago. Deep Value Alex says, hey Tom, have you shown the Citigroup Center Tower on the stream yet? I don't think so. Citigroup Center Tower. I'm not sure what that is. Or are you talking about just one of the offices that Citi works out of? I think they have a couple, but no, I'm not familiar. All right, West 39th Street, making good time. Okay, so Karina Thompson says Albertsons is big in Oklahoma. Yeah, I mean, if anybody wants to make a big push into, I would say, grocery delivery, you're going to need the bandwidth to do it. And I think that's why, in my opinion, Walmart is going to dominate that. Because think about the trucking infrastructure. I would say like 3PL trucking logistics infrastructure that Walmart has. I mean, it's unmatched. So at the end of the day, if you want to have more competitors to compete with Walmart for grocery delivery, I mean, who's the other competitor that you could probably think of? Amazon, maybe? So I actually think this merger would be pretty good. But the antitrust or the FTC, Federal Trade Commission, is probably gonna be all over this. Okay, so Eyeglass Lady says Albertsons is/was in Boise. Anthony says Kroger has a lot of stores in Colorado. They use different names in different markets. Ah, okay, so like there's different subsidiaries, I guess.
That's really good.
Oh, sorry. I thought she was asking me something. She was just hammered. I thought she was asking me directions. Pups says, do you rather Miami and New York City during the holidays? During the holidays, I'm going to be in New York just because my family's here, right? And New York is really cool during the holidays. Now, I think after the holidays, when it gets cold, yeah, I'll probably be spending, well, hopefully, be spending the majority of my time in Miami. But I don't know. I love both cities. I always get that question, but I love New York and I love Miami. I think those are my two favorite cities. But if you guys enjoyed tonight's live stream, feel free to leave a like on the video. Hit the subscribe button if you're new. We will be live tomorrow, Monday, 8:30. So for those people who are new, we do these live streams at 8:30 p.m. Eastern time. I'll give you one more shot of the Empire. Anthony says, have you ever been to Tokyo? No, but I may be going to Asia first week of January. We'll see. But I've never really traveled out of the country aside from Canada. So I really want to get back to Toronto. I think Canada is a great country. Our neighbors to the north. And maybe go to Asia. Right? Now that the big C has died down, you know? Hey, Zozo Bob, what's up? All right, I got to put a little bit of pep in the step. If you guys want to stay connected on Twitter, you could follow me on Twitter at Walks Wall Street. I usually post things there throughout the day as it relates to the financial markets. I think a little bit later tonight on the train, I'll post my deep dives as I go through my charts. Hey, Julmar, thank you so much for the $10 donation. You are very, very kind. This is coffee and a hand buttered roll. I actually may get that tomorrow as I commute to the office. I'll be thinking of you guys. I'll be like, yeah, I'm gonna get that buttered roll. You know who actually doesn't have that bad of a buttered roll? Is 7-Eleven. 99 cents, can't beat that. Really good. This is Macy's, the largest department store in the world, as we head towards Penn Station. But Julmar, thank you for the support. I appreciate that. Yeah, Natalie's like pepping that step. I got 5 minutes. Now here's the tradition on the Walks on Wall Street channel. I have never missed a train, not once. Never missed a train, and I do not plan on doing that today. But everybody, thank you for coming tonight to the Market to Look Ahead live stream. It's going to be a massive week on Wall Street. All of the major tech companies are reporting earnings. We are going to get GDP numbers out, okay? So GDP estimates are coming out on Thursday. We are also getting new home sales data, okay? Last week we got existing home sales data. This week we're getting new home sales data. Expect volatility. Expect volatility. So that's all we have for tonight. I hope you all have a great rest of your Sunday. We will meet again in the greatest city on earth, New York, tomorrow, 8:30. Have a fantastic start to the week. You guys could do whatever you want next week. There's only one thing you can't do, and that is quit. So you guys get to it, get after it on Monday, and we'll see you later. So John, thank you so much. Rebecca, thank you for joining. Karina Thompson, Joan Tortellini, Gary, Mohammed, Sparks Carnival, photos from around New York, Michael Joseph, Jim Wolf, photos from around New York, War Walker, Julmar, Abdullah, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Marcy, Eyeglass Lady, Spencer, Brad's Brain. Thanks everybody, appreciate it.